Hey there, YouTube streamers. This is Howie. I'm making a hopefully short video on variance. I think variance is a very important and often underappreciated variable when it comes to all sorts of things, including swing trading, as well as gambling, statistics in general. This might be something you are already aware of, but it was quite a surprise to me recently just in how much variance holds a place in anything that is numbers based. So let's jump right into it. I researched variance recently in my attempt to beat the bookies in a sports betting system I was trying to get going. It was very valuable to my mental game when I understood variance, so I thought it would be cool to share it with you guys. So most strategies for swing trading look something like this. You want to have about a 50% win rate. You want to get 2 to 1 or 3 to 1 on your returns when you win, and you want to just rinse and repeat. So this 50% win rate is sort of where I want to focus my attention on. Because the challenge with this is calculating how many trades you need to make before you can reasonably determine that you are winning about 50% of your trades, or I guess should be statistically winning about 50% of your trades. So I'll pose a question to y'all, and I want you guys to think about this question and answer it before I provide the answer, which is if you were to flip a coin, which of course has 50-50 odds, how many flips of the coin before you can reasonably determine that the variance is removed within about 1% plus or minus. So you would say after this many flips, it'll be between 49 to 51% for both sides. So would you think that would be 20? Would you think that would be 50? Would you think that would be 100 or even more? Well, before I answer it, I will pull up a couple of websites that will help us in this answer this question. The first is a flip a coin website. I'm just going to click 1,000 times flipping, and it's going to basically flip a coin 1,000 times and keep the results here. So as this is going, I'm going to go over to here, which is another website called Coin Flipper, and I'm going to test to see some of these answers. So we're going to basically flip a coin 20 times, and then it will provide us the answer here. So I'm going to flip it here. And we got a 60-40, so that's a 10% edge for heads. That's no good. 55-45, 45-55. So these are all 60-40, 70-30. So you can see flip a coin 20 times. It's entirely possible that well over 2/3 of the time it's going to land on one. So that's not enough. Let's look at 50. 58% of the time after 50 flips, that is not nearly good enough. 52, 54, 56. So you can see even with 50 flips, your variance is, all over the place. 6%. Oh, that one was perfect. Oh, so you have a 12% variance on 50 flips. Let's go to 100. Maybe you need 100 flips. 3% variance, 5% variance, 10% variance on 100 flips, 2% variance, 4%, 4%, 3%, 7%. So you can see even going 100 flips, you're still getting what should be a 50-50 proposition, and you're getting a 7% or a 14% total difference between these two numbers. Do a few more. There's a 6%, 2%, a 3%. That one's pretty close. There's a 13% difference. So 100 clearly is not enough sort of flips to determine. Let's go over here and check this guy out. So we've been running now, looks like 69 tosses, and we're at 4% edge for heads. And we'll just allow this to keep going. We're now getting closer to even. There's exactly even, but we'll see. Let's go over back here and we'll do 250 flips. That's got to be enough, right? 250. Okay, that's 0.8. We're getting good. There's a 0.4. Oh, we still got 3.2% on a random flip. Let's do it again, a 2%. So you can see, oh, there is a 9%. So 250 coin flips and it came up tails almost 60% of the time. So even though I'm doing a bunch of these, you're getting the idea. You can see the variance getting tighter with the more flips, but it's still not enough to sort of lock in there's a 6% lock in the idea that, okay, I can be confident that after 250 flips, it's going to be really close to 50-50 because it just isn't. There's a 6% edge for tails on 250 flips. So as we get into bigger numbers, you will see it tighten up. There's a 2% on 500 flips now, 1.6%, 2%. That one's nice and tight, 1.6. So the numbers are squeezing in together, but they aren't guaranteed to be even within a couple percentage points of even. So let's go back to the coin flip. And we now see just randomly still a 3%, a 2% edge. We're up to 150 flips. We're at a 3% edge for heads. So just in this other random calculator, you can see we're not quite at even after 150 flips. There's still some percentages off. So let's go back to this tab and I'll actually answer the question for you, which is 2500. So to essentially fully remove variance, or at least make it statistically almost impossible, you need 2500 events at a 50-50, which is, astronomical. So moving on. The reason I'm bringing this up ultimately is because it makes it very difficult as a trader to determine the success of a system, especially early on. You might start off and lose 4 to 5 trades, have 4 losses in a row, and just assume your system isn't working. If you're going for 50-50, you now know that is not necessarily the case. So it's just more of a mindset to have where you need to be aware that if you've done 30 trades over the last week and you've won, only 10 of them, that doesn't necessarily mean that something's wrong. It could just be variance. It literally could just be that flip of a coin where you're on a colder streak. And alternately, you could win 6 of 7 trades or 9 of 10 trades and think, I'm the best king of the world, queen of the world. But again, that is possibly variance. So my next question is, how long of a losing streak can you expect, assuming you have a 50-50 chance of winning your trade? If you do 10 trades a week on average, about 500 trades a year, let's say, you can expect 8 losses in a row to happen to you twice during that year. So you will have 8 losing trades consecutively 2 times each year on average, assuming you do 500 trades. 9 losses in a row, you'll have about a 50-50 chance after 500 trades. So that gives you just an idea of losing streaks and just something mentally to be prepared for and to understand that you will have downturns that are significant, and it's not necessarily because your system is broken or the stock market is terrible or some other attribute. It's very likely or highly probable that it has to do with variance. And again, to go back to this example of the losing streak, I'm going to pull back this coins that are now flipping. You can see we're over 200 flips in, and we are still looking at a 4% heads, a 5% heads advantage after 235 flips. And then within this, you can now see a whole lot of heads and tails. You will see some streaks here. Almost right away, 4 heads in a row, another 4 heads in a row. And again, this is just in the first 20 flips or so. 4 tails in a row. There's a 5 tails in a row. There's a 2, 4, 6, 7 tails in a row. So even on these 50-50 flips, lots of streaks. 2, 4, 6 heads in a row over here, and so on and so forth. We can go. This is a monster one. Look at this one. 2, 4, 6, 8, 10, 11 heads in a row. And this is again within the first 279 trades. And even though statistically we're now moving a little bit closer, a 2% edge, but you can see that there is variance. Look at this, tails, 2, 4, 6, 8, 10 tails in a row here. And this might be more variance than you actually expect from, again, just 300 flips. The variance is real, it's there, it's streaky. You're going to see these movements. You're going to see these within days and weeks and months. So it's just sort of being aware of that reality. And I guess the final point is just some food for thought. Most traders will make tweaks or adjustments to their systems um, based on too far small of a sample size. So if you have like 10 trades and 8 of them aren't successful, you might think, oh, I'm not doing this or that ever again because this system isn't working. But you have to take variance into account. And two potential ideas, neither of which I've done myself, but I'm certainly will be looking into, would be backtesting and simulating, say, 1,000 trades, 2,000 trades, just to get you a better feel so that when variance hits you, you're not freaking out. And then the second possibility would be paper trading, do 1,000 trades on your own. Most of these websites have this rewind feature, so you can go back a year in a stock and play it out day by day by day. Put your entries, put your stop losses. Did you win? Did you lose? And so on and so forth. So bottom line for me is I don't have the answer. There's no magic bullet as far as variance, but I just want to live in reality with my trading. I don't want to be ignorant to variance in numbers and variance in math because it's out there and it's real. Let's go back to this guy. So we're almost 400 tosses in, 400 coin flips, and we're still 3% difference between the heads and the tails. So you think of 4%, that makes a pretty big difference when you're looking at a 50-50 situation. So I won't go all the way to 1,000. That might take too long, but I think I'll cut it here. I hope that this gives you some understanding about variance and how big a deal it is, and how it can mess with your head if you're not careful. Thanks for watching, and I'll be around.